Let's take a quick look at accounting principles. Primarily a minute worth of topic focused on telling what's the account and how are the accounting entries made. Thanks to Sloan School of Management, this material has been derived from the lecture notes that were given in Sloan School of Management. So real quick, what are accounts or what are the accounting entries? As we know, in the real businesses, there are lots of business transactions happening, such as consuming inventory, resource transactions, purchasing material. All those have dollar implications. And all these are then evaluated using some kind of accounting as we know it. So the way they define is an account is a storage unit used to classify and summarize the money measurements of business activity. As I said, if there is a resource transaction, it may mean X number of dollars, or if a purchase order is issued, it may mean Y dollars. So all these are really converted into money and then classified into different so-called accounts. So what it does is it provides a unified method to measure and analyze all these activities that like few of the examples that we just took, and into a common denominator like money, dollars, right? And then you can analyze and evaluate how and where the money or the business activity has been going. One of the most common accounting method that worldwide is used is called double entry method or T accounts. As you can guess, it has two sides, debit and credit. Remember, debit always goes on left, debit on left, credit on right. And as we will find out in a minute, any increase in money or increase in an activity does not always mean debit. Okay, sometimes it means debit, sometimes it means credits. That's where the confusion starts. But for now, remember one thing, or rather two. T accounts or double entry account has two sides. Debit is always on left, credit is always on right. And all these accounts generally can be classified into three categories. There are more than one ways of classifying the accounts, but one of the primary method is asset accounts, liability accounts, and equity, that is stockholder owner's equity account. So more or less we'll focus for now just on asset and liability accounts and the credits and debits for them. So, but just to keep in mind those three types of accounts, the way they are related is total assets is equal to total liabilities plus total of equity. So in the asset type of accounts, such as cash, equipments, inventories, stuff like that, when an asset account some increment is made, like your assets have increased, the asset account is debited. Remember, when there is an increase in asset account, the asset account is debited. When the inventory goes up, it's a debit to the inventory account. When the inventory, or for example cash, goes down, a business had 10,000 cash on hand and they paid $10 to somebody, the asset account is credited. The decrease in cash means credited. And exactly reverse is the liability account. For example, accounts payables, like you owe some money to somebody. Here, when the account goes down, when there are decreases, right? So if your liabilities are going down, the liability account is debited. When the liabilities are going up, the liability account is credited. And just a quick 15-second introduction to couple more new terms. Ledgers. What are ledgers? Ledgers are really accounts that multiple accounts are collectively called as ledgers, right? Essentially, a long time ago, people used to write them down in the notebooks, and those notebooks used to be called ledgers. So the term still comes from there. And another way of classifying the accounts is balance sheet account or real accounts or permanent accounts. They all mean the same thing. Balance sheet account or income statement accounts. Income statement accounts are also called nominal account, temporary account, etc. And very related to ledgers is the journal. And what journal is really, it's a chronological record of all the transactions of the business, and all the transactions of the business will be then recorded into those accounts, debits and credits. Remember, asset and liabilities. So net in like a minute or two, here are the few concepts about asset liabilities, debit credits, double entry account.